Good afternoon, everybody. My name's Martin Gibbs from Dafferns Chartered Accountants, and I'm here today with three of my colleagues, Brian King, Karen Keeling, and Brian Jukes. Brian, and Karen are the three key tax experts at Dafferns. It's Wednesday, the 3rd of March, 2021, and we've just had Rishi Sunak's second budget as Chancellor. This one was always going to be a bit tricky because with all the COVID restrictions and government support over the last year, clearly there's a bill that has to be paid. So the balance was supporting businesses coming out of COVID, but equally making sure that the economy is in good shape long term. So starting perhaps with Karen, what was your key takeaway from today's budget?
Well, I thought it was good for businesses that they finally got a bit of clarity over what support that they would get. So we've had the announcements about the continuation of the CJRS, which is the furlough scheme. So that's carrying on and through till the end of September. So there's no change in the terms on that. But the employer will be expected to kind of help with some of the payments from July with a 10% addition to the salary, and then there'll be 20% from August and September.
And it's good that the scheme goes on to the end of September, so life in theory returns to normal from, what is it, the 21st of June. People have got a bit of leeway through the summer holiday period, and hopefully that will do the trick, and hopefully we won't get back into all this again. Brian Jukes, on the corporate tax side, what was, well, I think I can probably guess what your top takeaway was. What was your top takeaway?
Well, I'd say I've got two top takeaways actually, but yes, I had the most exciting part of the budget. The only proper tax rise in the entire budget, which was the increase in the rate of corporation tax to 25% from April 23. So there's a stay of execution on that. For the next couple of years, companies will carry on as they are. But in that 2-year period, we have the introduction of a super deduction for capital allowances. Not quite clear yet what that's going to be on, but it looks like it's going to be the classic plant and machinery spend. So 130% of that spend will be tax deductible for the next 2 years. Not just...
Is that within the current, is it $500,000 band that you've got with that?
There doesn't appear to be a limitation. There doesn't appear to be a cap. It's a super deduction on all of your capital spend to encourage companies to get out there and invest and get the economy really motoring again.
But as we were discussing earlier, not electric vehicles. Electric vehicles, we don't think are going to qualify for. No, that would be just be too much, wouldn't it? Brian King, your specialty is private client tax, capital taxes. What caught your eye?
Yeah, the areas that I concentrate on are income tax, capital gains tax, and inheritance tax. So I was absolutely delighted that these three taxes effectively been frozen in terms of allowances and rate till April 2026. So it's really good to carry on working with legislation that I'm familiar with. And there was, leading up to the budget, significant changes were predicted for capital gains tax and inheritance tax. So I'm a very relieved person that there's been no changes.
Yeah, there was certainly a quote, wasn't there, from the Chancellor about certainty being a vital component in helping businesses recover. One of the things I think we're anticipating with the changes to corporation tax, Brian Jukes, is a return of our old friend, the small companies marginal rate relief calculation that we used to love doing these, didn't we? But
well, yeah, being a mathematician, I'm afraid I do get quite excited by things. I know it's incredibly sad, but it's true. So yes, I'm pleased to have it back because it adds a little bit of extra fun to the corporation tax calculation.
And I assume that the bands will be shared across associated companies within the same group. So
pretty sure that's right, yeah.
Does dividend remuneration planning become more attractive if your profits are over 50k? It probably does.
Yes.
Balanced off against whether you can claim research and development, in which case you're better off having remuneration, and whether you've got a super deduction and some R&D, what that's going to do. So yeah, I think there's massive opportunities for some legitimate mainstream tax planning.
Yeah, I think I'm going to need some of Brian's help, with Brian being able to just settle in and carry on with all of the tax rates that he's had for many years.
Yeah.
Absolutely.
He's going to be quiet, so he's going to need to give me some support on corporation tax planning.
Well, he's probably got all the old tax cards still in his drawer in the office. He can just use those for the next few years, can't he? So,
the only way that I'll touch on like companies is for the remuneration planning. So so I just have to dip into it, and so yeah, getting companies' profits below the desired level to hook into a lower rate of corporation tax will certainly be part of quite a comprehensive amount of corporate tax planning now.
Karen, stamp duty, that was a welcome change or a welcome extension.
A welcome extension, I think. There was pressure on him to extend that date, because I think the solicitors have really been struggling with trying to get completions happening, and so it has been a bit of a difficult juggling act for them. So I think that will give some certainty for the housing market, that those people who've put offers in, that cliff edge is going to be pushed to the end of June, but then there is extra relief there after.
Yeah, it's another 3 months, isn't it, where the nil rate band stays at 250. So that's going to help a lot of first-time buyers, which is good news.
Well, there's another announcement about the government backing 95% mortgages. So if that combined with the SDLT extension, that will already, both measures will enhance an already buoyant housing market. So that's pretty important to people entering the housing market for the first time, but also good news for businesses that are reliant on a thriving housing sector. Some
interesting bits and pieces then on COVID support. There are new recovery loans from banks that are coming in. We've had the CBILS loans, we've had bounce back loans, and now we've got recovery loans. So that will be welcome for many clients, I think. An extension of the grants available to small businesses in the retail, hospitality and entertainment sectors, where I think they can access another £6,000 grant depending on their rateable value. There were two things I noticed as well, two phrases that I really don't like. The first one was, remember, he was going to level with us about what was going to happen. And he didn't mention leveling, did he? And leveling, I think that's a very Boris phrase. I don't like leveling. And the other one is non-essential retail. What an awful term that is. But he didn't mention he managed to avoid it. Or did he just say it once? Any other stuff on COVID support that you guys spotted?
Well, there is the self-employed income support scheme. So that is being extended to September, with a fourth and a fifth grant being available. And also for the first time, people who are newly self-employed and they completed a 2019-2020 tax return, they will be able to claim under the fourth and the fifth grant. So that's good news for about 600,000 taxpayers.
Interesting thing on apprenticeships. I don't know whether you picked up on that. The incentive for employing apprentices is going up to
new apprentice hires. Yeah, was that £3,000? Yeah.
£3,000 regardless of their age. So that's so yeah. If you're thinking of a career change, then you can get on the ladder as an apprentice for £3,000.
So there might be a future for me in tax with a £3,000 funded apprenticeship. I don't know.
Well, I don't know. You've shown a few signs of talent there over the years.
I was also pleased to see the loss carryback given there, because a lot of businesses have struggled over this period. So, carrying back for just 1 year doesn't always result in being able to get a refund. So being able to throw it back for that further period will be a major benefit for some businesses.
Yeah, because as it stands at the moment in March 21, under the current rules, you can only carry a trading loss back for corporation tax purposes for 1 year. You can obviously carry it forward against profits in the same trade. It's a couple of years ago that you could carry losses back to 3 years, but that got removed.
Back in the financial crisis, they reintroduced it for a period. So back in 2008-9, I think it was.
Yeah.
And Karen and I were talking just the other day about this, and it was then that I said, well, yes, it wouldn't surprise me in the least if we get that again in this budget. And there it is. There is a cap on that, but it's a high cap. It's £2 million. So
Right.
won't affect most businesses. And it's important to note that that's both corporation tax and income tax losses.
Well, I think that probably just about wraps things up in terms of our initial reaction and take on the budget. There'll be a lot of content in the coming days on the Dafferns website with our budget summary and tax cards available as PDFs for you to download. And there'll be a number of specific in-depth articles from Brian, and Karen looking at elements of this budget in more detail. So if you've enjoyed the content of this video, please give us a like, subscribe for more content, and we will see you very soon on the next video. So thank you, Brian, and Karen, and see you again soon. Cheers.
See you. Bye.
Bye.